I'm here to share with you about today's market update. Nasdaq fell for the third straight day as data show worsening economic outlook. In my account today I've made a total loss of $1,440 or 1.95%. Right now, the net asset of my account is 72,264.75. Today, Unity Software decreased for 6.14%. In the post-market, it decreased for another 0.39% as the economic indicators showed a worsening economy. Today, on the other hand, the natural gas, which usually goes against the economy, rose for 2.72%. In the market today, market closed mixed, with Dow Jones Industrial Average closed with a gain of 0.24%. Nasdaq made a total loss of more than 1%, and the S&P 500 made a loss of 0.25%. Today, the tech industries made a loss of generally beyond more than 1%. On the other hand, healthcare and utilities made a gain of more than 2%. U.S. stocks closed mixed on Wednesday, and the Nasdaq fell for the third consecutive day. U.S. bond yields were lower. The U.S. ADP employment data in March was lower than expected, and ISM non-manufacturing index fell unexpectedly in March, showing potential signs that the U.S. economic growth is heading for a sharp slowdown or recession. After the release of the weak ADP private employment data, the yield on the 10-year Treasury bond fell below 3.29% on Wednesday, and the yield on the policy-sensitive 2.2-year Treasury bond fell to 3.72%, both approaching their lowest level since this year. The ADP private sector employment report released on Wednesday shows that the number of ADP employment in the U.S. in March was 145,000, which was lower than the consensus estimate of 200,000, and it was also lower than the upwardly revised 261,000 in February. According to the analysis, the slowing down in the private sector hiring is a potential sign that the U.S. economic growth is heading for a sharp slowdown or recession. Our March jobs data is one of the several signals that the economy is slowing, said Nella Rickardson, chief economist at ADP. After a plateau, it is still slowly declining. Another data shows that the U.S. ISM non-manufacturing data unexpectedly dropped significantly to a 3-month low in March. According to them, the expansion rate of the new orders weakened significantly, the new export orders plummeted to a record, and the price index dropped significantly. According to Wells Fargo, the ISM non-manufacturing index calls into question the resilience of the U.S. services sector. The March ISM services PMI was lower than expected. Wells Fargo analysts pointed to this as a sign of cooling market activity in March. As rising interest rates and recent stress in the banking sector weighed on the outlook, with new demand retreating, the report is not good news for the resilience of the services sector. In addition, the data also shows that the U.S. trade deficit widened for a third straight month in February as exports fell more than imports. Data from the Commerce Department on Wednesday showed the goods and services trade deficit rose 2.7% to $70.5 billion, the largest deficit in 4 months. These figures were not adjusted for inflation. Imports fell 1.5% to $321.7 billion, while exports fell 2.7% to $251.2 billion. On Wednesday, U.S. stocks investors were once again worried about raising interest rates. The Reserve Bank of New Zealand raised interest rates by 50 basis points overnight, noting that inflation was excessively high and persistent. The market believes that the Fed has finishing interest rates and will begin to cut interest rates in the summer. But Cleveland Fed President Loretta Mester said the Fed could have rate hikes further even though the economy appears on a slowing path. She says on a Tuesday that the federal funds rate should rise above 5% a year ago, given that the current interest rate is 4.75%. This means that she believes the Fed should raise interest rates further. Mester continues to speak on Wednesday. She says she expected interest rate to raise a little bit before remaining unchanged. She said Fed officials were focused on getting inflation back to the 2% goal. Tensions in the banking sector have added to uncertainty about the direction of the interest rates. Master said it is too early to judge whether the Fed will raise interest rates in May. That's all I have for today. Thank you for listening. Don't forget to subscribe and like the next episode.